Okay. If I edit the video here, it may be because it's too long, and I'll show the rest of the video or rest of this homework in another video. But let me continue recording here. For number 12, it's asking me to prepare something called an income statement. You always do it for a period of time. In this case, it's for the month of December. And there's only two types of accounts that go on the income statement. Revenues at the top, minusing the expenses below. So if I look at my table here, here's revenue, and the whole thing, I can put this one number inside of the income statement, $6,800. I first would have to find the name of the account. So here's a choice I can have, listing the name of the accounts. So just real quickly, accounts payable is not revenue, it's a liability. Here's an asset, a equity but not revenue, equity but not revenue. This is asset. Here, whenever you see the word fees or earn, that's probably an indication of a revenue type account. So here's the name of the account, and here's the dollar amount. Now if I had other ways of making money, I would probably have another revenue account here and the dollar amount and a subtotal. But in my case, I only have one type of revenue. Okay, one revenue account. So let's do the expenses here. So if you remember, we have, let's see, one amount, this $1,600 right here, and that was let's go back up here. That was for rent. Okay, so let's put it in the rent expense. If you had paid rent more than one time, you would have added up for all of the whole period and put the grand total of the rent. I have only one amount here for rent for the month. Okay, let me bring up the listing of transactions. So that's well, it's easier to take a look at the table, yeah, for every amount I had entered. So 1,600 was entered. Here's another 1,600 that was on the 29th. I believe that was the pay I gave that assistant. So that's a salary expense, wage expense, another 1,600. And then the last amount here in the expense column is this 600. What was that? Utilities, right? So utility expense should be on my listing here. 600. So automatically you notice how it's indented away from the revenue, and then it puts a subtotal of the expenses here. Now it's my job to take the difference between the revenue and the expenses. You know what? I cannot do that in my head. So let me bring in my spreadsheet here. 6,800 revenue minus 3,800 expenses, and the total is 3,000. Oh, you know what? I could have done that in my head. Sorry. I don't trust my brains though. 3,000 is called net income. If you had more expenses than revenue, that would be called a net loss, a negative number down here. Okay, so this is the income statement, one of the financial statements we're learning about here in chapter 1. Another financial statement is called statement of retained earnings. What this is doing is keeping track of all of this net income that you're earning over the life of the company, minusing out any of the profits that had been paid back to the owner coming out of this profits. So here at the top would be the retained earnings at the beginning of the period. In our case, we started our business on December 1st, and it was 0. Remember, this is a new business. And here at the end of the period would be the leftover retained earnings, December 31st. Now we're going to need to plug in the amounts that increase and decrease retained earnings. What increases the earnings is this profit we just made, the 3,000. So let me put that in, 3,000. And that's called net income, just like the label up here. Net income will increase the retained earnings. And if we had a loss over here, a loss would decrease any profits we had. In fact, if this bottom line here is negative, we call that a deficit. Sometimes you hear that when the government spends lots of money, yeah, versus the taxes it collects. So now you have some profits from which you can pay out the shareholders. That payments are called dividends. So where is my dividend here? Called less cash dividend. And let me go back and double check. I think it was $9.90 here that we had paid out. And I believe I have to show it as a negative number. And automatically it's subtracting out to get this total at the bottom. Okay, so this is the retained earnings I have at the end of the period. And if I do my next month, January's financial statement, this amount here would move to the top, January 1st, increased by the January net income, reduced by the January dividends to have the January 31st retained earning balance. Okay, next financial statement is probably the hardest one, and we really don't get into it until later in the semester, but you just follow the format shown to us here in chapter 1 and follow this example to do your homework. We have three different parts of the cash flow statement. The first part is showing where the money is coming from and going to due to the regular operations of the business. That's the buying and selling of your services and buying and selling of services and goods from vendors. So the main way of money coming in through operations is from your customers. So here, cash from customers. And it's not necessarily the sales number, the revenue number here in the revenue column. Remember, revenue was recorded when it was earned. And this cash flow statement is asking you the cash collected from the customers, not necessarily earned from the customers. So we have to go back and take a look at the transactions to make sure the amounts we had collected. So let me bring up the transactions again, and let me bring up my spreadsheet one more time, and we'll go through each one here. We'll go through each transaction and fill out the cash flow statement one by one for each transaction here. So here's the first one again, the $64,000 collected from the shareholder, the stockholder. That's not regular operating activities. That's called financing. So let me put it in here as the first item. Cash from investment from shareholder, so a stockholder, 64,000 positive. Okay, so I took care of this number one transaction. Number two, the company rented office space, again paid. I'm looking for cash coming in and going out only now. Paid $1,600. So that's rent going out. Let's see, paid rent $1,600. Okay. Next, the company purchased $14,900 of equipment. Again, I'm looking for cash coming in and going out. And here's cash going out, $6,700 for electrical equipment. So whenever you buy and sell assets, generally now, this is a general rule, that's called investing in assets, investing activity. So here I have electrical equipment, purchasing electrical equipment. Now I did buy $14,900, but remember the objective of this financial statement is to show cash flowing in and out. Not $14,900, but minus $6,700, because the rest I still owe, and they all show up on the cash flow statement when this is paid off. So right now it's $6,700 minus. Next is the company purchased office supplies, paying $800 cash. Even though this may be an asset, we'll find out in a future chapter, it's really part of operating. So here I'm paying supplies. I forgot a minus over here. I would have gotten it wrong if I didn't double check it. Here is a minus $800 for supplies. Okay, so that's the fifth. The company completed electrical work, immediately collected money coming in, cash of $1,200. This is from customers, so I'm going to put it here in this first line here. Money coming from customers, the main thing. And I'm going to have to add to that for other transactions below, collecting money from customers. Okay, that was the 6th. On the 8th, the company purchased $2,580 of office equipment on credit. Credit, not cash. So for at least this transaction, I'm not going to do anything right now. at least on the cash flow statement. The company purchased $400 of office supplies on credit. Again, nothing to record here. Well, I did skip one here on credit. We did work and did bill the customer and didn't collect yet. Yeah, so nothing recorded for the credit transactions. On the 20th, the company paid. Here is cash going out for office equipment. Okay, so let's do it here. Again, just like the electrical equipment, that's an investing activity. Office equipment, cash paid, purchase office equipment, minus 2580. Okay, on the 24th, billed, didn't collect yet, $900, so nothing to record here. Company receive. Here's money coming in, $4,700 for work completed. This is from the customer. Here, this line here. So to this $1,200, I have to add $4,700. So can I do that in my head? $5,900, right? $5,900 before I forget. $5,900. Okay. So that was the 28th to 29th. Paid the assistant $1,600. So that's a regular operating type of activity, paying your employees, minus $1,600. Here we're paying utility bills, paying utilities, minus $600. And again, one more time, paying here dividends. Again, whenever you pay back the stockholders, the shareholders, that's not an expense. This is classified on the cash flow statement under financing activities. Here's money coming into the from the stockholders, and here is money going out to the stockholders, called dividends, minus $990. Notice how it was subtotaling for me automatically on this cash flow statement. I have three subtotals. Here is $1,300 positive coming from operating activities. We call that cash inflow or net cash provided by, not going out or used now, yeah, used, but provided, coming in by operating activities. See the negative here for investing? That's cash being used for investing, investing used. And then this positive number for financing is cash provided by financing activities. So here's the three changes to the cash during our month of December, and here's the total change to cash. So we should have some description for that. Positive, right? Increasing. So in this next line, it's going to be the cash we have at the beginning of the month. And of course, again, this is a beginning business, so it's zero. So if you combine that with the change during the month, here we get the same number for the cash we have at the end of the month. Now the magic to all of this, you see this $55,030, it better match what I have at the bottom of my cash column right here. Otherwise something is wrong. This is the amount of cash I have at the end of December, December 31st. I started off with, where's my cash flow? I started off with zero. That's what this line is saying here. And here's how the cash had changed by these three different groups: operating activities, investing activities, and financing activities. Again, we'll go into more detail in a future chapter, but just use this as a sample to do your homework for chapter 1. Okay, last financial statement we need to prepare for this problem, this long problem, is something called a balance sheet. And notice the date here, just one date, not a period of time, but what you have in assets, liabilities, and equity on this date. And one of the simplest thing I know students can remember is that the first thing you list down for asset is the best asset most people think they have, right? Is money, cash. And then it should be this same $55,030. The next best thing to cash is waiting to collect the money from your customers, called accounts receivable. So if I go back up and take a look at the second column of that table, at the end of the month, here customers owe me, I'm waiting to collect $900. Okay, so that will eventually be converted into cash when the customers pay me off. 900. So the next asset I list down is the next thing that can be kind of used up fast, and that's the office supplies. Here on my table at the bottom, the third column, office supplies is $1,200. Sorry, there's no easier way to scroll through this, and I have to kind of remember the number too. $1,200 supplies. And then was it office equipment? Office equipment and electrical equipment. I think those are the last two. Can I remember these two last assets here? 2580, 14900. $2,580, 14,900. And notice it's totaling it up here at the bottom. And because they call this a balance sheet, this has to balance. This number has to equal this number. And if you remember, basically this is the same thing as our accounting equation. Assets on the left side are equal to liabilities plus equity on the right side. And the only liability account we have is accounts payable. Whenever you see the word payable, that's probably an indicator the account is a liability type. So let me take a look at the total of the liability column. That's the first one right on the right side of the equal sign, $8,600. 8,600. 8,600. Okay, and then there's going to be two accounts under equity. One is the common stock, and the second one is retained earnings that we had figured out in the previous financial statement above. The common stock should be on my table here. It hasn't changed at all. We didn't sell any more or issue any more common stock during the period. And your retained earnings is really a combination of the revenue minus expenses. Remember, that's called net income, less the dividends. In other words, combining these three numbers together, keeping in mind this is negative and this one is negative and this is positive, but it's all combined on the statement of retained earnings. Let me remember this 64,000 right here. 64,000 is your common stock. Aren't you getting dizzy looking at my screen? 64,000. And then the retained earnings up here, December 31st. Man, that's the date of our balance sheet, is 2010. Okay, so if I enter this 2010, keep your eye on these two totals now. Enter. Oh, it matches. Now, definitely there's a mistake if it doesn't match. And even if it does match, there's still a possibility that, something could be recorded wrong. For example, an example would be where it still would balance. If, let's say, I put in $1 up here instead of 64,000 and $1 up here instead of 64,000, and all of my work would still balance even though it's wrong. Okay, but the moment of truth, I already did the check for this first one, right? So for number 12, I go to the bottom and click on my check my work. I have only one chance to do for number 12 here. Come on, green check marks. Come on. Come on. Did I do something wrong? I'm not sure what I did wrong. It shows empty here. Anyway, hopefully it'll work for you. I think I've just used up one of my chances, even though you can see I've have all my numbers in here. So I'm going to cancel, and if I submit my work, I didn't do all of these first problems. I just did that 1, 11 and 12 problem. I'm going to submit anyway. Now again, before you submit, you should attempt all the homework questions, because you have only 3 times to submit everything, and I'm using up 1 time right now for this 1 or 2 question problem. So let's see how it shows up. Of course, I didn't do this first one. Let's jump to the one, and you notice it shows this button here to show correct answer. I think I'm gonna not have it for all the problems during the semester. Okay, so you guys have to kind of figure it out carefully. But let's jump to that question 11 and 12. Let's see. I know I got 11 correct, right? All the green marks here. And let's check the others here. Looks all green, looks all green. And of course, your numbers are going to be different. Okay, but you follow the same format of what I had done, and you should get pretty much all the points, at least for this problem. Okay, so if you have questions, contact me, drop by my office, email me. Okay, see you later.